You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Solana, Doge, and more. Cryptocurrencies and digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments throughout the world's leading crypto derivatives markets. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Amberdata. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amberdata delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amberdata eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. Now it's time to dive into the exploding world of crypto derivatives. It's time for the Crypto Rundown.
All right, everybody. That music means we are back once again on the network. Time for the old Crypto Rundown, the program here on the network, where we take a hiatus from our usual stomping grounds. Not going to talk about your VIX options or your Apples or your SPYs or your Teslas here on this show. Now going to go a little bit farther afield, explore what's cooking out there in them thar crypto waters. Maybe talk a little bit of Bitcoin, ETH, who knows what else. It's going to make it onto the show. Talk about the volume, the volatility, the skew, the unusual activity, all that fun stuff, and a whole bunch more. My name, of course, Mark Longo from the THE, optionsinsider.com, as well as from the network upon which so many of you are binging and mainlining these days. Hope you're having a good start to your trading week. Had a fun episode of the old option block. Now, keeping the ball rolling on our heavy content week with a little bit of the old Crypto Rundown. Of course, if you just listen to the Crypto Rundown, I know there's a lot of you out there, crypto native, just coming in from the world of crypto, and you're just delicately, gently dipping your toes in the options waters. Well, then, we have a whole network of content for you to binge upon to get yourself up to speed. So if some of these terms we're throwing around like skew and vol and term structure and all this stuff is spooky or scary, you just don't know what the hell we're talking about, check out Options Bootcamp on our network, Options Playbook Radio. Both of those will serve you well, get you up to speed so you can understand everything we're talking about here, as well as other fun programs on the network. The option block for some what's trading out there, volatility views, breaking into the vol space, the advisor's option, this week in futures options, you name it, we have a show on the network geared around it in some capacity. And then, of course, if you want more content geared around you, including quite a few pro Q&As these days that have delved into the world of crypto derivatives, mostly driven by your questions, only one place to go, theoptionsinsider.com/pro. While you're there, you can guide all of our pro Q&As with your questions from some of the best minds in the world of options and derivatives. You can check out the, 250 plus episodes that are waiting there for you the second you hit that go button. And then, of course, Options Oddities every Friday, all sorts of fun, live streams, everything else we do here on the show, giveaways, all sorts of fun. theoptionsinsider.com/pro. Speaking of fun, let's see who's joining us for a little bit of fun in the old crypto hot seat today. I'm pleased to welcome back our old friend, fresh off of Vol Views. He took a foray into the world of equity vol, but now he's back in his original stomping grounds of crypto vol. Yes, it's our old friend, Mr. Greg Magadini, now the director of derivatives over there at Amberdata. Mr. Greg, welcome back to the Crypto Rundown. Have you recovered from your sojourn into the world of equity volatility, sir?
Oh, yeah. What a fun time. Well, thank you for having me back on to the Crypto Rundown. I had a lot of fun last week on volatility views. I'm excited to dig into some activity going on in crypto vol now.
All right, then let's do it. It is time for the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show where we do just that. We break down all the action in the world's leading digital asset. We're talking about the big dog, which is Bitcoin, a little bit smaller than it was this time last week. You know, listeners, we had quite the rampage over the past month, all these rumors about ETF approvals and everything else, really just lighting a fire under all of the crypto markets. Over the past week, we've seen another rally, then over the weekend, some news, maybe SEC punting a little bit on the ETH, ETF, and everything else. Maybe some of that. Just also, we've had just a tremendous runoff. Could be some profit taking as well. All of that combining for a little bit of a downturn here coming into the start of the week. Bitcoin, when we kicked off the show, a little bit north of 4,500. So still north of the 40K level for all of those of you out there who are worried about that, but also retreating pretty far from the level we were at this time last week, which was nearly 42,000. We were 41,906 on the show last week. It puts us down about 1,325 handles from where we were this time last week. The high came earlier on the weekend, actually. So we did continue the rally through the end of the week into the weekend. We got up to about 43,628 or so. And the low came right, looks like that was right before our show, I believe. A little bit shy of 40K, 39,979. That was on Monday in the early morning hours there. So we did dip below 40K, obviously, to start the week. Then we pretty much rallied throughout the week until coming back now, starting to come back down the other side of it. So a lot to unpack. Before I start breaking down all the vol and all that other cool stuff, Mr. Greg, what's been catching your eye out there in yet another wild and woolly week on the crypto front?
Yeah, well, obviously this pullback is definitely a sharp pullback. This is the type of activity we saw in 2017 and in late 2020, early 2021. These types of kind of nasty pullbacks are just typical of a bull market. I wouldn't read into this in the sense that, you know, this is over. I think the trend is actually still intact. We got a little ahead of ourselves, but, you know, this is kind of normal activity. This is a nice place for people to want to start to get in. And it's kind of interesting, the impact that we've seen on the vol surface over the weekend from this pullback. So happy to get into that in a little bit.
So you're not dumping all of your crypto holdings and saying, look out below, the sky is falling, sir?
No, that's not my my thesis coming out of this pullback. And if anything, I think there's interesting trade structures that can be done in the vol space thanks to this and the reaction in vol itself.
All right, let's get into some of that fun. Let's set the table first, listeners. Let's get out there into the weekly vol and work our way out. Again, all of this data coming at you, courtesy of Greg's platform over there, Amberdata.io. So make sure if you are intrigued by all this data we're talking about here, and we're literally just scratching the surface here, listeners. There's a lot more. It's only a 1 hour show, roughly, at the end of the day. It's only so much we can fit into it. If you want to kick the tires for yourselves, Amberdata.io, the place to go to kick the tires and light the fires. If you did that, listeners, you would see that the weekly vol, the 7-day vol out there, still managing in Bitcoin, still managing to keep its head above water, above a 50 handle, actually. We're at about a 49 3/4 on the show. Last week coming into the start of the show. This week, we're at about 52.5. So managing to tick up, which is interesting because usually out there in crypto vol, Bitcoin in particular, especially when we've had these dramatic runs, we see it performing almost the opposite of what you see in the traditional equity, which is when you rally, we see equity vol come in, and when it drops, equity vol rallies. Everyone who's watched VIX is familiar with that. In the crypto space, we know there's a lot of holders out there. They bid up that call skew. So when we start rallying, have a protracted rally, vol tends to increase. And when we come back down, we actually usually see vol come in a little bit, but that's not the case right now. With the weekly vol, again, weekly vol, bit of a air quotes there because there's a lot of gamma baked in there too. Again, if all this is completely befuddling to you, check out Options Bootcamp, Options Playbook Radio. But the near dated vol, managing to hold firm. That's also the case if we go out to the more traditional vol metric, which is the 30-day vol, listeners. We were a little bit north of 50 on the show last week, about 50 and 3/4 coming into the start of the show today. We're at about right around 50 and a half, about 50.45. So down about 0.3 on the week. So again, all of this downside, all this movement, we're still managing to pretty much keep vol roughly in line with where it was this time last week, which is kind of interesting. So we're not seeing a vol collapse as we move to the downside or anything. So the hodlers aren't just abandoning things willy-nilly. Again, if you go a little bit farther out, the term structure, 6 months, where a lot of the hodlers like to hang out, 6 months and beyond. We are seeing the vol come in a little bit there, which makes sense. It was pretty frothy this time last week. I mean, the 6-month vol was nearly a 60, 59 and a third. That's a lot of juice for a 6-month vol in Bitcoin. Coming in a little bit this week, 56.70 out there. Mr. Greg, I know you pay keen attention to the vol surface out there. Anything catching your eye on the vol front in Bitcoin this week?
Yeah, definitely. So one of the things that's really interesting is that we've seen sort of this persistent kink in the January expiration, which makes sense because I think Bloomberg says there's a 90% probability that the ECF approval comes in on January 10th. So that expiration will encompass that decision. Yay or nay should move the markets. But what's really interesting is if I look right now at the term structure, the cheapest point on the term structure is the December 29th expiration, which sort of makes sense because we have Christmas week and holidays, and theoretically things won't move like crazy. But the differential between the 29th expiration, December 29th, and the January expiration right now is pretty close. It's only a couple points wide. So that's the first time we've really seen a pretty narrow differential between the two. So there might be some interesting things to be done there in terms of the term structure itself.
Yeah, December expiration is always an interesting one on the chart because I've said many times on this show, crypto, for whatever reason, Greg, for most options, they kind of trade pretty much steadily throughout the year. Crypto options, in particular, you have ETH and some others, they really tend to aggregate a lot of OI around the quarterlies. That's just the way they like to trade. So when the quarterlies roll off the board, they take a huge chunk of the OI with it. And December for the last few years has been the leader of all of them. It takes a huge hit to the OI. Really coming into January, you're almost looking at a new product. When so much OI rolls off the board, you have to kind of reconfigure and start looking at which strikes are open for size, which one went away. So that's been a big inflection point every year for the last few years, the December expiration cycle. And it sounds like from what you're saying, Greg, we're not seeing as much of an anticipated difference between December and Jan as what we've seen in years past.
Yeah, exactly. So I think that's pretty interesting, especially to your point, like everyone's coalescing in the quarterlies typically. So in a lot of ways, these quarterly expirations are efficiently priced because there's good flow both ways. But if I look at the realized vol, the seasonality of realized vol for Bitcoin over the past, call it 10 years, actually December and November are typically big moving months. And January is also a big moving month. And then the biggest month is February. So summer months are kind of dead in crypto, historically speaking, on a realized basis. But January, February, November, and December are sort of the biggest moving months. So on a realized basis, January and December historically have the same realized vol. And so it's kind of interesting that now we have that January catalyst. There should be a reason for a differential in the fact that it's almost trading parity, a couple points wide, basically just a rounding error. That's pretty interesting to me. And obviously, if we look at the term structure as a whole, right now, this pullback has flattened up the term structure a lot. So we currently reside in the top, call it 80% that we've seen year to date in terms of term structure shape. And so this is a very rich time for the front end. So there's definitely some stuff that's able to be done there as well. So if you want to get long that January contract and assume that the implied vol will remain firm going into decision day, and then kind of finance it with some shorter end stuff, that seems interesting as well.
I'm curious, you've been hanging out in the crypto derivative space for some time. What is your hypothesis? Why do you think so much of the flow tends to go up in and around the quarterlies?
Yeah, so typically when Deribit first started listing options, well, first they started with just futures. And so those were the typical cycles, and quarterly was kind of where a lot of the futures volume and open interest coalesced. They later added perpetuals, which became the dominant Delta One instrument. But you kind of see the same type of thing in the option. So when quarterly futures were the most popular instrument, obviously the quarterly option that aligns with that future makes a lot of sense. It's also an easier instrument to hedge because there's a direct trading vehicle. It's always kind of tough to trade like a off-cycle option to the futures expiration. There's always a little something there to be done. So I think that's really kind of the thinking behind it. That's why a lot of the open interest and OI started in those quarterlies. And then the last caveat is that the longest dated expirations will be quarterly. So Deribit launches about a 1-year contract that's going to come in the form of a quarterly. So it has time to amass open interest and volume.
Well said, sir. That is usually the cycle we see with the futures options markets. They start with the future, and they tend to expire on a quarterly cycle, listeners. So the options tend to spring up around there. And usually we see evolution beyond that, but in the crypto space, they love it. They love themselves a quarterly. That's what they want to trade. So who are we to judge here as we keep on rolling out there into the realm of the skew? A big swing in the skew, as you might imagine out there, listeners. Again, the skew showing which way the options are biased right now, at least from an overall implied vol perspective. Let's start in the weekly skew, which again, so much goes up in the near-dated stuff these days. If you're not talking weeklies, you're kind of missing a lot of the game. For better part of the last month and a half, we've been dramatically biased to the upside in that weekly skew, 4, 5, 6 points or more to the upside sometimes. Last week on the show, it was nearly 4 points biased to the upside. Coming into the show this week, it has swung dramatically in the other direction. We have gone from about a positive 4 to now a negative 3, so that's nearly a full 7-point swing in the weekly skew. And again, it makes sense. We saw most crypto assets fall out of bed 10% sometimes in the last 24 hours or so, just off all this news we've seen over the end of the weekend coming into today. So makes sense. A lot of this skew would swing towards the negative side. We saw that in the monthly skew as well. We were biased a little bit north of 4 points this time last week, about 4 1/3. Coming into the start of the show this week, on the monthly skew, all that's gone, and it is a little bit to the negative, about negative half a point. So nearly a full 5-point swing on the monthly skew. Longer term, you expect cooler, saner, calmer heads out there, and that's pretty much the case out there. We were almost positive 6 on the show last week, about 5 2/3. Coming into the start of the show today, we're about 340, so coming in a little over 2, about 2 1/4 points on the week. So not surprising, we're seeing some of the bulls in retreat out there and some of that dramatic upside call bias that we saw bake in over the better part of the last month and a half. Take a bit of a hiatus. Mr. Greg, anything catching your eye out there in the world of Bitcoin skew this past week?
Yeah, well, just to give some context, so 2023 was really interesting in terms of skew. I had talked about this a lot earlier in the year, that the 6-month skew was decidedly positive for Bitcoin throughout the year, so implying a positive spot vol correlation. But last year in 2022, with 3 Arrows Capital, Terra Luna blowing up, FTX blowing up, the realized was decidedly negative spot vol correlation. So for kind of 2023 to flip on a dime from taking a negative spot vol relationship and then pricing in a positive spot vol relationship essentially consistently throughout the year, that was really interesting to me. And it kind of showed me that people who are playing the options market were really expecting or positioning themselves for some sort of like upside volatility that we actually saw all year. And so that's pretty interesting to me. And now if we look back at where skew's lining up, obviously the short dated stuff has come down and the weekly is negative and the rest of it's kind of hovering around 0. But that 6-month skew continues to be decidedly positive. And so right now, if you combine that with the term structure where you have, call it 6-month at the money vol trading at around 60 implied, and then you combine that with a positive skew in the 25 delta wing, those out of money calls for call it the next 6 months are pretty pricey. And so people are willing to pay up for that. They're essentially positioning themselves for a continued bull market. And I don't think that's wrong. I think that makes a lot of sense. And if we actually do get a bull market similar to 2017 or 2020, well, vol can go up to 150. We've seen that before. We can make the argument that crypto is more expensive now and the market caps are bigger, so it'll take more money to move it to that type of vol. but 60 is high in regular world, but is not necessarily high in crypto world. So there's definitely something that people are expecting is going to happen in the next 6 months to 12 months. So I'm pretty excited about that.
Definitely a lot of big decisions in the offing in the coming, even just month, listeners. A lot to look forward to out here as we're coming into the new year out there on the Crypto Rundown. Let's see what's cooking out there on Deribit from an overall OI perspective. We're seeing both wings managing to keep their heads above water this week. The calls at about 232,000 contracts open on Deribit. That's up about 7,000. You might have thought, hey, folks might be bailing over this big sell-off in the last 24 hours. Maybe some folks taking their calls they've had on and dumping them. At least so far, net OI continuing to grow out there. Could be some overriding, obviously, baked in there as well. And then the puts popping a little bit. 121,000 puts open on Deribit. That's up about 20,000. So we are now slightly inside that 2-to-1 metric calls over puts, which is the normal ratio we hang out at over there on Deribit. So, of course, if we get another aggressive sell-off to the downside, wouldn't be surprised to see some more puts popping up onto the radar and that ratio continuing to shrink. Speaking of shrinking, let's get out to some of the products out there that I know a lot of you like to trade Bitcoin through in your securities accounts. Let's go out to Bitto. It was at about a 20 when we kicked off the show, a 20 even. That puts it down about 3/4 of a point from where it was this time last week. Of course, over the interim since our last show, we saw Bitto get up to a little bit over 22, about 22.13 or so out there. So it had a nice run, gave up all of that over the past week, a lot of that in the past 24 hours out there, net down about 3/4 of a point on the week. The ADV remaining strong at about 50K. It's back up about 2,000 from where it was this time last week. Still a ways to go to get back to that almost 100K it was at right after it launched, but we'll see if all this volatility keeps up out there. Then going to see Bitto ADV remaining firm for a while. In fact, look at today, already nearly 70,000 contracts on the tape out there today in Bitto land. So it looks like another rock'em sock'em day out there. And the vol kind of following suit out there, actually coming in a little bit, down about 4 points. We see Bitto vol tends to be a little bit wilder sometimes than what we're seeing out there on the straight up Deribit options out there. In terms of size positions, it's kind of the same deal we've seen for a while. All longer term Jan upside, longer term as in Jan of 2025. The only Jan of 2024 position are 83,000 of the Jan 65s, which is, again, an interesting strike choice. Everything else, we have the 20s, the 25s, the 35s, and the 30s all open for size with the largest position in Bitto options right now. 96,000 of the Jan 2025 30 calls. I've waited on those in the past. Not my favorite way to go with a product that is so dividend heavy, but it does seem to be the way a lot of the OI is lining up out there. Speaking of what's lining up, a very heavy day. Let's see what's lighting it up out there today. Then I want to get Greg's thoughts on his favorite product, which is Bitto. About 10,000 of the D's 22s leading the dance out there in Bitto out there today, which again is the kind of paper we kind of expect. Looks like paper maybe closing those and opening about 6,000 of the D's 20 puts. So that makes a heck of a lot more sense, listeners. D's 20 puts going up for prices around 50 cents, it seems like today. So you like those, listeners? At the money put in December, expiring this week for around 50 cents. I mean, we all know Bitcoin can move that much in a couple of minutes. So it could be underpriced, could be crazy expensive. I'm curious, Greg, what are your thoughts on your favorite Bitcoin vector for securities accounts, which is Bitto, sir?
Well, yeah, Bitto definitely has its peculiarities, but it is the only game in town really for U.S. traders. So there's definitely some stuff I like about it. Right now, the position that I have and that I continue to hold is this January 2025, so 1 year out leap, the 20 to 35 call 1x2. And I also think the 25-35 call 1x2 is also interesting. You can put that on for free. So you could basically own the one at 25, sell the two at 35. There's a $3 dividend that comes out of the instrument. You're really kind of playing the 40K to 80K kind of profit window, and then the 120K break even. So it kind of set up for, Bitcoin rally throughout next year, kind of, probably a little shy of the 100K mark. To me, that makes a lot of sense, especially when you're kind of selling this high vol level on the short two. I definitely like that. So to me, that's an interesting position, and that's what I kind of keep holding. And so, yeah.
Are you long some BITO against that? Are you just naked short units to the upside? Are you relying maybe on spot in another account to kind of offset that?
So the structure itself, typically that's how I do it. In this case, the 1x2 itself will be naked, and then I usually buy some cheapy call options, call it like 60 days out at 45, just to cover that insane tail risk. And I just call that throwaway insurance money.
Yeah, I was going to say, they're going to margin you to death on something like that.
Yeah, that money gets thrown out. But you're paying 8 cents for the protection per contract, which to me is definitely doable. And if vol comes in a little bit, then it becomes really easy to finance the rest of that.
Yeah, and it frees up a lot of capital in your account, which, like I said, otherwise would go to all that margin for the naked short upside, which brokers we all know love out there these days. Since we're talking about ways to play Bitcoin in your securities account, really quickly, because this one popped up on our radar just an hour or so ago on the option block. I know for a lot of you, when we've done polls in the past, this has been your preferred way to play Bitcoin in your securities account, which is good old Mara, aka Marathon Digital Holdings. What a journey this thing has been on right now. If you looked at it just right now, you'd see it right around 14.5. It's down a little bit, down about maybe half a point on the week. You might think, big deal. It's actually been on quite the tear. It got all the way up to, looks like about 17 coming into the Friday close, and then given pretty much all that back today, off 2.25, or if not more out there, about 14% today. So Marathon, of course, a minor listener is just taking it on the chin out there today, $2.50 roughly to the dark side. So rough day for them. The ADV, though, kind of blowing BITO out of the water. 271,000. That's up 37,000 from this time last week. And today we're already at almost 300K, so going to beat that today. The vol, getting back to what Greg was saying about how crypto vol can get lofty. 108 out there in Mara. So, and again, it sold off 2.5 handles in a couple of sessions. So hard to argue that vol isn't warranted. In terms of size positions, the top 5 out there in Marathon right now, listeners, it is still 4-1 calls over puts. The only put you can find is the number 2 overall position with about 28,000 of the Jan 10 puts out there, which is kind of interesting. The number 1 size position out there in Mara right now, 35,000 of the Jan 10 calls. So a lot of action on the 10 strike. I said we're hanging out at about a 14.5 right now. In terms of action, getting back to what we were talking about earlier, in terms of action in Mara, it is 21,000 of those D's 15 calls, which again makes a heck of a lot more sense in Mara. Those are about 50 cent out of the money calls, and those are going up for prices, listeners, around 45 to 60 cents. So again, they're not giving them away, and if this sell-off continues, those are going to be worthless. But intriguing, a 1 week, not even, swing at the upside bat for around 50 cents. Interesting out there in Mara. Again, you're talking triple-digit vol, so things are not going to be cheap, but that's what we've got going on out there. Greg, I know you and I have talked about BITO before, but a lot of people like to play Mara out there. Have you dipped your toes in the miners at all, and what are your thoughts on Mara and these names?
I actually haven't dipped my toes in Mara or any of the miners. It's not something that I follow very closely. I do think in the crypto equity vol space, I think Coinbase is super interesting. Not only has Coinbase sort of been on a tear in spot returns, but to play the January spot ETF vol kink, January expiration for Coinbase stock isn't trading at much of a premium compared to December, and they are going to be like a direct beneficiary of an approved spot Bitcoin ETF. So if I look at the applications, something like 90% of them are going to use Coinbase as the custodian. So that's the source of revenue for Coinbase. And if I look at the market cap of Coinbase, they're around 33 billion, whereas Bitcoin is about 850 billion. So obviously, it doesn't take us much money to move Coinbase, but in terms of market cap to sort of business revenue, essentially, of having the spot Bitcoin ETF, I actually think that would be a good reason for Coinbase to move. So to me, that seems kind of interesting. I think that's a nice direct play on spot Bitcoin ETF approval or not. And it's interesting that January is not necessarily much more pricey than the rest of the term structure.
Yeah, it's interesting to see how much paper goes up in some of these affiliated names Like we just mentioned, Marathon, a pretty active contract, the ADV nearly 300K, even eclipsing Coinbase, which is 236,000, which is no slouch in and of itself. So a lot of paper going up in both of these names, even though Mara managing to take it. Some of that, of course, being that's just a cheaper underlying, so it's a little bit easier to maybe swallow some of those options. But intriguing stuff. We have to keep on rolling. We could talk Marathon and Bitto and all that stuff for the rest of the show, but now it is time, listeners, to explore the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, let's do it. Let us commence our exploration of the altcoin universe. Let's start where we are wont to do with the top 10 from an overall market cap perspective. You might be saying, why bother? It's always the same. No, a little bit of a shakeup out there this week, listeners. First off, it cost you, right now about almost 13 and a quarter billion to break into the top 10. That actually gets us to our old friend Doge, moving from number 8, where it was locked for a long time. For the better part of the last few months, it's been at number 9. Number 10, the entry point to our top 10 has been Tron. For quite some time, Tron kicked to the curb this week, listeners. It's all Doge at the number 10 spot, with a little bit shy of 13 and a quarter billion worth of market cap. So there are some movements going on out there. What could supplant number 9, or I should say, what could supplant Doge at number 9 and kick Tron to the curb in our top 10? Well, it's Avalanche, back after a little bit of a hiatus out there. I haven't talked about this one in a little while. Back on our radar again this week, right around 13 and a quarter billion as well. So it's a evolving dance. At any time, Doge could be number 9 and Avalanche number 10, but either way, both of those fighting for the bottom slot there in the top 10. But Avalanche kicking Tron to the curb out there this week. Number 8, Cardano, kind of hanging out where it's been for a little bit, at least from a top 10 ranking perspective, coming in at about 18.8 billion worth of market cap. Number 7, USD Coin, 24 and a quarter. Number 6, Solana, 29.6 billion. So obviously that one taking a bit of a hiatus out there as well. Number 5, XRP, 32, almost 33 billion worth of market cap. Number 4, BNB, 36.2 billion. Number 3, it is Tether, 90.5 billion. You know what number 2 is? Number 1 in a lot of your hearts, it is ETH, 262 and a quarter billion. And the big dog, a little bit lighter this week, it is Bitcoin, just shy of 800 billion worth of market cap. All right, a lot to unpack. Let's get out there to that aforementioned number 2. It is ETH, again, taking a little bit of a hiatus this week. Not quite as aggressive of a hiatus as we saw out there in Bitcoin. ETH on the show last week, 22.27. This week, 21.71 when we kicked off the show. Down a little over 50, about 56 handles on the week. The high came again early in the weekend on Saturday. We broke 2,400 ever so briefly before giving all that back and then some. The low was about 10 handles below where we are right now, right before the showtime, 21.63. So we're kind of hanging out near the lows, at least for the week out here. Of course, obviously, we all know ETH can get lower, and it was not too long ago. So intriguing stuff afoot out there. Mr. Greg, anything catching your eye out there, either in the shakeup of the top 10 market cap? I know you're a huge Tron fan. And then B, what's catching your eye out there in ETH, sir?
Not a huge Tron fan, just for the record. ETH is super interesting right now. So one of the things that we've seen since the Shanghai upgrade, so we created these gamma profiles with our mutual friend, Ewan Sinclair, very confident in the dealer positioning from our gamma profiles on Deribit. And what we've seen is since the Shanghai upgrade in mid-April, we've seen a lot of supply of call paper. So a lot of people have been buying ETH, staking it, and selling covered calls. And it's been a persistent trend all year that there's a huge supply of paper from overhead. And so now what we've recently seen is that when BlackRock announced that they would do a spot Bitcoin, spot Ethereum ETF as well, the demand for ETH optionality went through the roof. And essentially the street started buying paper and dealers became negative gamma for the first time all year, basically. Now this is switching back. So if I look at the gamma profile, essentially dealers are long gamma, anything above $2,350. And so kind of anything above that, the street is short a bunch of paper. The market doesn't think that we're going to go beyond 2350 to 2500, 3000 mark. That's not how the market's being priced right now. But what's really interesting is that earlier this year, ETH volatility was cheaper than Bitcoin volatility because of that supply of paper. And now ETH volatility is more expensive than Bitcoin volatility because of sort of the recent realized vol move. But if that supply of paper comes back online, which it looks like it has, theoretically, the implieds should start trading below or at Bitcoin implieds as things kind of normalize. And so there's a good relative vol trade here. If I wanted to buy volatility, I would do so in Bitcoin. If I wanted to short volatility, I would do so in ETH, at least kind of given the relationship of 2023. There's a good argument to be made that ETH is going to be more volatile. It's got a smaller market cap. I think that's very valid. But outside of that, I do think the picture of the flows is very important. So I do expect covered call writing back in ETH to come online. And so I think that will be a big pressure on the implies.
I got all excited here, Greg. I was thinking the world returning back to normal, ETH trading at a premium to Bitcoin from a vol perspective again. And here you are, just bursting my bubble, telling me it's all going to go away. I was all excited for the show, Greg, and you're killing me here. Let's break down some of these numbers and see if we could see what the heck Greg is talking about here. Let's go out to the weekly vol first, a 7-day vol. Listeners, last show it was 51 3/4, so already looking fairly frothy, at least compared to a lot of the other assets we talk about on shows like TWIFO. Of course, as Greg mentioned, compared to historical crypto vol, we obviously can get higher. And that is happening this week, 56.3 out there in the weekly vol in ETH 7-day vol. So looking fairly juicy. Same deal as you go out about a month to the more traditional vol measure, 30-day vol, 51 3/4 on the show last week, 55.1 actually when we kicked off the show. So ticking up there as well. And in fact, you go out 6 months, same deal. Not quite as dramatic, obviously, but still an increase. It was about 60.8 on the show last week, 61.5 this week's up almost 3/4 of a point out there as well. Fascinating stuff. Now, of course, if you swing to the skew, a little bit of a different story. We've been biased to the upside in ETH skew for a while now. That is starting to go away. No surprise, seen a huge sell-off over the better part of the last 24 hours. Last show, the 7-day skew in ETH was almost a positive 3, about a positive 2.8. That has swung almost exactly in the other direction. We're at a negative 2.7 now. So swinging over 5 points total in the dark side direction. A monthly skew, same deal. All that positive upside bias. It was at exactly a positive 5 this time last week. All that's gone. It's pretty much flat, about a positive 1/4 now. So all that upside juice. Now the calls and the puts are flat. Again, if all this is voodoo to you listeners, all Greek to you, check out some of our educational content over there. It will help you get up to speed out here. Longer term, the vol not moving as much as you would expect. It was almost a positive 6 on the show last week, 5 3/4. Coming in to start the show today, about 5 1/4. So coming in about half a point out there. And nothing's coming in on the OI front. We have about a little over 2.25 million, about 2.28 million calls open on Deribit right now. It's up about 80,000. So again, continuing to add OI on the call front, even in the teeth of this dramatic near-term sell-off. And the puts catching a bid out there as well, at least from an OI perspective. Getting some life out there, up 121,000 contracts to nearly 900K this week, 893,000. And Greg, I was joking earlier about Tron. We all know you're really size invested in Polkadot. That's your favorite. But any other altcoin catching your eye out there on the show this week, sir?
I used to be a big fan of Polkadot. I'm surprised that project kind of never kind of caught on as much as I thought it would, because the technology is pretty interesting. As far as altcoins, I'm always a big fan of these DeFi option protocols. I know Lyra, this is a protocol. I'm actually applying to be a delegate for voting on a protocall, so that's interesting. But they are going to launch their V2 pretty soon. So that's an interesting sort of play around announcement launch. And then for other platforms that don't have a token but are worth checking out, Synquote and Ribbon Finance's Avo, those are pretty interesting DeFi experiences. And I don't know if there will be an airdrop for those platforms, but I don't know that there wouldn't be an airdrop either. So for anyone who doesn't know what airdrop is typically how protocols distribute a token when they launch one is that they distribute it directly to their users. And so if anyone has used those platforms, typically their wallet will be part of the airdrop. So that's something that's interesting. And then outside of that, I still like that Elon Musk Dogecoin play. I don't know what trick he has up his sleeve for Dogecoin, but I wouldn't be surprised if he says something and that thing just 3x's in 24 hours type of deal. But, who knows? That's pretty speculative.
Yes, the definition of speculative out there, listeners. We are kind of coming up against it. So we do have a fun question here. It looks like it's right up your alley, Mr. Greg. So I think we'll get to that now. A little bit of the old crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, welcome to the Crypto Questions. You folks know where to get at us at Options on most of the major social media platforms. Questions at theoptionsinsider.com also works. If you're part of the live and part of the pro, you can always use the members hotline or indeed just use the live chat. That always gets bumped up to the top of the list out there as well. And this one came in, Greg. I'm not sure where this came in from. I'll have to check and see. But it came in from MZEK. They had a question that seemed like it's right along the lines of what you've been tweeting about lately. And they just said, WTF, WTF are app chains, and can I trade them? Thanks. And I happen to see, Greg, you've been tweeting a lot about all things app chains. So as the hot new trend out there in crypto. So for MZEK and maybe a lot of our other listeners who are asking the same question, WTF are app chains, Greg?
Cool. I love this question. So it's kind of the natural scaling evolution of Ethereum and the Ethereum landscape. So just to briefly speak about, so Ethereum, one of the big problems is that everything has to be, all the transactions are processed sequentially. So it creates a lot of congestion on the platform when there's a lot of transactions. It takes a while to get yours confirmed. So people invented L2s, which are essentially rollups, which essentially mean that it's like a new blockchain that has its own sort of transactions and activity on it. And then they'll take the state of that blockchain, that L2 blockchain, and then they'll stamp the state on Ethereum. So the official stamp on Ethereum is like the official state of the L2. And now you can start processing transactions off of Ethereum, but sort of digest the output back onto Ethereum to have sort of a secure network off chain or on a side chain or level 2 chain, essentially. Now, app chains are that same concept as an L2, but it's specific to a potential protocol. So, for example, Lyra, as part of their V2, instead of doing it on an L2 called Optimism, they're creating their own Optimism chain that will have, it's like an L2 on top of an L2. So all the transactions for Lyra are done on that app chain. They're calling it the Lyra chain. And then that state gets published to Optimism, and that state gets published to ETH. That's kind of how it works. And some app chains, actually in the particular case of Lyra, they might publish their final state directly to Ethereum as well. But the idea there is that now transactions are extremely fast because there's no one competing for transactions outside of the protocol itself. Transactions are extremely cheap because there's no real gas to be paid. And so it's a really organic way of scaling. So now if you kind of extrapolate that to the future of blockchain, you can imagine every DeFi protocol having its own app chain. And so the idea is that now instead of like everything being transacted on Ethereum is just kind of the final ledger or the final reading for the state of all these other blockchains. And so that's how we could imagine scaling. And so it's kind of an interesting direction for DeFi space.
All right, Mr. Greg, that music means we've come to the end of another epic sojourn through the world of crypto. Man, we touched on a lot of stuff out there. Started off, of course, in Bitcoin, the vol, the skew, all that fun. Got into some of the other products you folks like to sling, like, of course, your Bitos, even a little bit of Mara. Got into ETH and some of the altcoin, all the fun, and got out of here on app chains. Man, it's been quite the journey here on the show, Mr. Greg. But before we get out of here for this week, if our listeners are intrigued, they want to kick the tires and light the fires, maybe check out all these cool gamma profiles you were talking about and everything else over there at Amberdata. Where should they go? What should they do?
Yeah, absolutely. So to check out the application, just go to pro.amberdata.com. And then for our weekly newsletter, you can go to amberdataderivatives.substack.com. And then lastly, if you want to check us out on Twitter, it's @GenesisVol. And then we also have a podcast and a YouTube channel. You can just find that by typing in Amberdata derivatives in your YouTube search bar.
There you go. No shortage of ways to get at them. Give them a follow on Twitter if you want all sorts of interesting updates about things like app chains and everything else that we don't have time to get to here, usually on the show or in between his appearances here on the old program. That is going to do it for us on the network today. We got a busy week in store for us. Back again tomorrow. All you pro folks are in for a treat. Got a double dose of pro Q&As coming at you tomorrow. So if you're not in the pro yet, what are you waiting for? You're going to have double the opportunity to ask questions about whatever your heart desires in the world of options and derivatives of volatility, including quite a few times we get lured into the dark side of crypto vol with a lot of our guests. So if you have questions along those lines, theoptionsinsider.com/pro, the place to go where we will all tackle them together. And then, of course, back again on Wednesday for some great options bootcamp educational content. Another double header coming there. So, man, it's just an embarrassment of riches. Our pro folks will get access to both of those episodes immediately as well. The on-demand folks obviously will get them in the coming weeks. Thursday back again for the option block, as well as This Week in Futures Options, a show you should be checking out if you're listening to this one. We do touch on crypto as well as all the other assets that are trading in this crazy market. So if you want to see how crypto vol stacks up to, let's say, ags or metals or equities or anything else, it's all there. Energy on This Week in Futures Options. Friday, a show Greg is now very familiar with, Volatility Views, and then after that, of course, we come back exclusively for you pro folks, a little bit of the old options oddities, and we're back again next Monday, another episode of the Crypto Rundown. Stay safe out there, everybody.
The Crypto Rundown is brought to you by Amberdata. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amberdata delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amberdata eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.